initial capital was almost like 60 lakhs when I started in 2019. Right now, it ranges from anywhere from 4 to 7 CR depending on the strategies that I put across. I think overall, I would say if I have a corpus of let's say about 100, close to about 50 to 60% came from salary or the job. I would say remaining 20% came from stocks, and the remaining 20 to 30% came from trading. So, and trading gave me the confidence that I'll be able to really survive even if I do not have a full-time job. The one of the main reason for me to quit the job was when I saw I'm able to make more money in the trading, especially in 2024, that point of time. 2020, just after Pongal, January 17th or 18th, whatever the date. From there, I'm trading daily. I did not miss a single day. So far after, if I remove the initial to do 1 to 2 years of losses, but approximately I'm able to make about anywhere from 18 to 22%. Sometimes it's more than that. That's the returns I'm able to generate. Typically what I do is I put the money into stocks or the mutual funds. I pledge that money and I use that money for the option selling, because you can pretty much use that. So I will look at two strategies which are my favorite. One is directional, one is the non-directional, which is the probability based model. So let me spend some time on the directional trade. So I built one indicator on the TradingView, which is freely available for everybody to use. So this is called adaptive super trend. This is little different than what a normal super trend does. Normal super trend, I think most of the traders would know, this is based on the ATR. There is a multiplier and then the factor. ATR stands for average true range. Depending on how the stock moves in a range of, let's say, how the stock moves in a range, given a time frame like 15 minutes, 1 hour. So depending on that, there is a multiplier and then there is a factor. I'm not getting technical details of how the super trend is calculated, but the adaptive super trend is markets generally, if you take an instrument, right, they do not behave, one instrument is always different from the other instrument. I think one of the biggest flaw is if you try to use super trend in all the instruments equally, then you will not get the right results. So adaptive super trend, it got about 7 different ways to calculate the super trend. So either you change the, let's say, factor, or you change the multiplier, or you change the time frame. One of those things you will be able to really change. But from the user's perspective, it's very easy. Either they would pick up, apply the super trend, and then pick up, let's say, 15 minutes or 45 minutes or 1 hour time frame. And then you can see in the screen here, when you apply for 15 minutes, right, you got to see a lot of greens here. What does this mean? Let's say if I have taken these trades for, let's say, 60 days. I had put a time frame here. Let me show that very quickly. So there is the 60 days, the performance, which is actually measured here. So one of the super trend that it picked up is the dynamic. So that gave about 2,700 points. So, and also these, you can see here, it also gives what are the points that is giving for an average trade. So average trade is basically in a 60 days time frame. This would have probably taken about maybe 30 trades or 40 trades. Each trade, how many points it is given. So now this is so easy to use. You apply this on 15 minutes or 10 minutes, whatever it is, and then if everything is green, which means that on this particular instrument, this particular time frame is working. For instance, if I'm going to change this to, for instance, maybe 1 day and then see what happens. So you can see in 1 day time frame, you got to see a lot of reds here, which means that on Nifty, for instance, 1 day time frame, we should not be using it. If we use, we will end up losing money. So you can actually take one more, for instance, Reliance, and then see whether it is going to work. Reliance also, it is pretty much everything is red. So let me now change this to, let's say, 15 minutes and then see whether it's going to be maybe 20 minutes and then see whether it is going to be anything better. So I think 20 minutes obviously looks better, and then you can go to 15 minutes and then see. 15 minutes also definitely good. That is, the indicator is so easy, anybody can take the directional trades. This is, I would say, a long short trade. What I meant is, for instance, if I apply in Nifty, the way which I would do is, I have to do manually. For instance, if a user, if they wanted to use this particular indicator, what they have to do is, when there is a sell signal, for instance, they sell the call option, and then the signal continued till here. when the signal reaches here, this is long short trade, right? So this point of time, they'll have to exit the call option, and then they need to now sell the put option. That's as simple as it gets. Important thing is somebody would always be on the trade. So and then whether they are able to make the money or not, this particular P&L table would directly decide. The important thing is because this I applied on the instrument, but then if they get into options selling, they'll also get an advantage of time decay, which I did not factor here, but that is an additional advantage they're able to get. So one more my favorite strategy, which is I would say bread and butter strategy, which I've been using from 2021. This is not meant for intraday. You'll have to either do for weekly or the week plus one or monthly kind of thing. So, but right now I'm going to demonstrate the weekly strategy, right? So again, this is not a prescribed strategy, but this is a concept. So what I did was in this program, what I did was we have expiries until last year September 3rd till Thursday, and then after September 3rd we got into Tuesday. So I got the precise dates of when the expiry starts, expiry end, and then look at how the Nifty behaved in those expiries. If you take weekly expiries, right? So how many times Nifty would expire below 2%, 3%? How many times Nifty would expire above 3%, 2%? So that's the thing. You got to see all the percentages here. For instance, if you really look at, right? So let me zoom it for you. If you look at 3.4% here, which is basically, if you go here, this side, maybe let's look at this one, 96%, right? So what it says is from, this is the time frame we got here. So from 2021 to 2026, 14, which is today, close to 96% of times Nifty expired below 3.5%. That is what we'll have to look at. So, and then if you go to bottom, again the similar number, let's look at, let's say minus 3.5%, right? So minus 3.5%, it says that close to 96%. So now this gives some confidence saying that if you take this trade 100 times, which is basically weekly expiry, you go 3.5% up, 3.5% down. There is a 90% probability that your trade is going to work. But then this rate got to be taken multiple times, not just once, but then multiple times. So typically the way which I do is, if you take a strangle, which is selling the call option 3% above or 3.5% above, selling a put option 3.5% above at the starting of the expiry. Now, if you do this 100 times, there is 90% of times it is going to work. Now the question is, what happens in the remaining 10% times? I think this goes back to my earlier philosophy. When the trade goes against you, it is important that we define our risk management, what kind of amount that we would like to lose or we can afford to lose. So again, there are a lot of ways to manage this. Sometimes you would probably put a, let's say you put a hedge probably close to your short option, so that you will not actually get into too much of loss. That is one way to do that. The other way to do that is you can do a lot of adjustments. So that's how we'll actually manage the trade. But then this is my philosophy I'm doing for multiple years. This works well. If somebody got 1 or 2 lakhs, trading is not the place for them to really get in. So basic definition of the markets is capital markets. It's capital intensive. I mean, generally when people ask me, my personal suggestion would be at least anywhere from 10 to 20 lakhs to start with. Anything below that, one thing is it is not worth their time. The second one is they might probably end up losing all the money if it is below that. The reason is they do not have any space to adjust the trades. So it is important for the trader to understand what strategy suits to their mindset. That is very important. For instance, somebody doesn't have a lot of patience, or somebody wanted to do a very quick trades and then come out, right? So for them, doing a monthly strategies may not really work. So, or somebody wants to really make quick money, for them the scalping would work, and vice versa. Somebody doesn't have that ability to take the stress or the pressure, the scalping doesn't work to them, and options buying would not work to them. If somebody has a lot of patience and then can wait for a lot more days to see their trade is going to give money, those people, if they try to do scalping, they will be absolute failure. A lot of times what would happen, traders would actually speak to somebody who is fairly successful, and then they think that if scalping worked for them, it will work for me. And then if the short strangles worked for them, it is going to work for me. So that I think, or sometimes a lot of people get excited with the expiry trades, and they'll see some of their friends making money. They suddenly think that I can also make money. So that, my view, would not work. So I think very similar to if you take any sports examples, right? So you can't expect a Tendulkar to do a good wicket keeping. It doesn't work. They need to really find what kind of mindset that they have, what kind of trading style that they need to adapt to. I think once they do that, I think it will be a lot more success. Personally, I like waiting for the trades. There is a lot of patience that I put in. And that's the reason I tend to do even the long dated trades. Like today, I run like December trades, which is another 6 months from now. I'm okay to wait. Sometimes people do not have the patience to wait for a trade. They would have probably waited for long, and then they think that, okay, now I must take a trade. So which I think a beginner should definitely avoid. So my view, let's say somebody takes a trade, they should be able to explain to, let's say if their friend calls saying that, why did you take a trade? I'm not expecting a 12 years old to understand, but then if their friend calls one more trader, they should be able to explain saying that this is the reason that I took a trade. These are the underlying assumptions. This is the data that I analyzed to take this trade. And this is the reason why my trade, I think, is going to go in my favor. So they should be able to explain the trade to them. So my view, ups and lows are true in any career, anybody's career. It could be sportsman or even the movie actor, right? So nobody will have super hits all the time or super success on the ground. Trading is absolutely similar. The reason is, let's say, what are the strategies that worked last year? There is no guarantee that they work this year. So somebody has to really learn the things and then adapt to the new environment. But keeping that aside, the way which I would look at is the loss making days, I will always look at some bit of a retrospection, what happened. So usually any trade that I take, there is an underlying assumption. Underlying assumption could be either the market will go up or go down or stay flat, any of those things, right? So, but then that assumption, when it comes to reality, could be very different. The way which I would look at is what is the basis for my assumption and then why the trade went wrong. That is the easiest one to take. But a lot of times, including me, we tend to do over trading, or we also tend to do a trade based on the greed, trade based on the fear. So some of these things nobody can help. Some of these things we'll have to overcome ourselves, and we need to go through that phase. So even if you read 100 books, until unless somebody experience the greed, fear, and then take some impulsive trade and then get a hit, that got to be experienced. Even if I say that do not take impulsive trade to 100 people, I don't think they will listen to that. So I think every trader will go through that phase. They have to experience themselves. Maybe in that experiencing period or experimental period, they should not lose a lot of money. That's all. Most of my strategies, I look at fixed profit and fixed loss. So generally, even when you take a trade, right, you mostly know when to quit the trade or when to stay on to the trade. That's the first important thing. Second, very important thing is when trade is going into losses, a lot of times it doesn't make sense to average it out. The reason is anyway, it's a falling knife. Important thing is to understand why the trade is going against us. And then if it is a randomness, we can't do much. But if it is, let's say, if there is a reason for the trade to fall, or the losses to fall, then it's better to stop and then we can always take a fresh trade. So that's very important. From May 1st to May 10th, I made money every day. And overall, each day was like 1 or 2%. And by the time I reached May 10th, I think it's close to about 22% or whatever within those days. The reason was, I'll tell you, that point of time, the elections were going on in the phases and then the IVs were quite spiked up. So, and then May 13, 2024, there was a midcap Nifty expiry. So far, I always took a contra trade. Contra trade in the sense, if there is a gap up, I would actually sell the call options, assuming that it's going to fall down. And if it is a gap down, I would sell the put options. But then that day, midcap Nifty acted exactly opposite to me. So out of the 22%, I pretty much lost about 18% in a single day. That was the biggest loss that I had. So generally now what I do is, if I'm losing the trades, let's say 2-3 days continuously, I close everything and then I take the fresh trades. I do not want to really continue them. Trading is still a profitable venture. Suppose if you pick up any startup in Bangalore or even the movie industry or even the restaurant business, close to 95% would be failures. So that way, trading is still a profitable thing. And if somebody has the right skill set, right risk management, and the right way to really take the trades without losing money, they still can make money. And a lot of times, even if you take, let's say, I'm trying to compare with the movie industry now. If you take movie industry, we do not know what the audience would like, but at least in the trading, you know what are your strengths, what you can do, what you can't do, and you know when to quit, when not to quit. So with that, I think there's a lot of control in trading compared to other industries.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.